Welcome to ForexTV.com. It's Wednesday, April 2nd. I'm Remy Hookey for your New York Forex Market Buzz. In afternoon trade as of 12:45 p.m. Eastern Time, Euro dollar is at 1.5630. Sterling dollar is trading at 1.9827, while dollar yen is around 102.72. U.S. equities are trading mixed on the day after rallying across the board in yesterday's session. The major indexes started Q2 with surprising strength. And ahead of Friday's non-farm payrolls report, today's ADP National Employment Report came in better than expected. According to ADP, 8,000 private sector jobs were added in March. And in his testimony on Capitol Hill, Fed Reserve Chairman Bernanke warned of a possible recession and gave a bleak assessment for the U.S. economy. This afternoon, I'm joined by Esiner, Senior Market Analyst at Ruesch International. Good afternoon, Omer.
Good afternoon.
Thanks for joining us today.
Thank you for having me.
Well, the U.S. dollar has continued to gain against the Japanese yen in today's session, and after yesterday's rally in equities, risk appetite has held up. But Omer, it appears as though investor sentiment has been contributing to the rebound in equities here in the U.S. as well as abroad, but nothing has changed fundamentally here in the U.S. So if you could start out with your analysis and outlook for dollar yen.
Well, dollar yen has rebounded nicely over the last couple of days, fueled mostly by the rally in equity, as you mentioned. The Dow closed up over 300 points yesterday. We saw similar gains in Asia and Europe. So the carryover of improved investor risk appetite has really benefited some of the higher yielding currencies at the expense of the Japanese yen. So I would expect the yen to remain under pressure for the very near term. But going forward, I think the market still remains very nervous that we could have more credit-related bad news. Excuse me. And as a result, I think the yen could see a rebound over the very near term.
Okay, Omer, now that we've covered dollar yen, let's shift our focus to euro dollar. Growth and rate differentials between the U.S. and Eurozone have been dragging the U.S. currency down, but we have been seeing dollar strength in yesterday's session. So if you could give us your assessment for euro dollar near term and also going into Q2.
Well, you're right. Over the last couple of sessions, we did see the dollar rebound a little bit, pretty much across the board. So the euro was no different. I think what happened was a little bit of a retracement from oversold territory for the U.S. dollar. So a little bit of a correction for the dollar against the euro, but also, as you mentioned, things have not changed. The underlying fundamentals that have led the dollar to fall to record lows against the euro remain mostly in place. So I think as long as we expect the Federal Reserve to cut interest rates aggressively, and as long as we expect the ECB to remain on hold, then I think we could see the dollar vulnerable to further losses. The upside surprises to recent Eurozone inflation data have only fueled expectations for steady rates from the ECB. And so, again, I think as long as that outlook for a widening yield spread for the euro over the dollar remains in place, then the greenback should be vulnerable. So I would expect the dollar to give up most of its recent gains over the next couple of weeks.
Well, Omer, now that we've covered the Eurozone as well as the U.S., let's take a look at the U.K. as well as the British pound. Has the dollar bottomed against the British currency, and what ranges do you forecast for the pair going forward?
Well, I'm hesitant to call a bottom for the dollar. That's burned a lot of traders for some time now. So I think the best I could say that going forward would likely be range-bound trading for cable. I expect the dollar to remain within a broad range against the British pound of around 2 to about 197. Going forward, I think the risk to that forecast would be if British data disappoints significantly, then we could see the Bank of England pick up the pace of its policy easing campaign, and I think that would leave the pound vulnerable to losses against the dollar. So going forward, I think mostly range-bound trading, and if we do see some downside surprises to British data that suggests that their economy is slowing at a more rapid pace than we've currently priced in, then I think the pound could be vulnerable to some more losses against the dollar. Maybe we could see 195 over the next month and a half or so if that case turns out to be true.
Okay, and let's take a look at the dollar block currency of the Aussie dollar. Given an increase in carry trade interest right now as well as risk appetite, what's your forecast for the Aussie dollar against both the Japanese yen and the U.S. currency?
Well, we've seen the Aussie give up some of its recent gains over the last couple of sessions, really as commodity prices have cooled a bit, and also after the Reserve Bank of Australia left interest rates unchanged yesterday. That outcome was pretty much fully priced into the market, but the accompanying statement did douse expectations for further policy tightening from the Reserve Bank. So I think going forward, the Aussie will probably remain, well, its upside should remain somewhat capped against both the U.S. dollar and against the Japanese yen, given the fact that the interest rate outlook for the Reserve Bank of Australia has shifted a bit now. We're looking for steady rates from them. So I think, again, that should dull some of the Aussie's recent luster. Against the dollar, again, I think its losses might be somewhat limited given the fact that the U.S. currency has been weak across the board. So going forward, I would expect the most pronounced losses for the Australian dollar against the Japanese yen.
Okay, Omar, before we wrap it up, if you could give us your forecast for Friday's employment situation report, primarily your forecast for non-farm payrolls as well as the unemployment rate.
Well, currently the consensus forecast is looking for a loss of about 60,000 jobs in March. I think that's a pretty significant number given the fact that we've already seen two back-to-back monthly losses in non-farm payrolls over the last 2 months. So I think that kind of an outcome would probably play up concerns about a recession here in the U.S., and it would likely reinforce expectations for further policy easing from the Federal Reserve, keeping the dollar under pressure. Having said that, though, we did see an upside surprise to today's ADP number. The two have not necessarily been very closely correlated, but I think there is some risk of an upside surprise to the non-farm payrolls number, given the disappointing forecast that we're looking for right now, and given the slight upside surprise that we saw to the ADP number this morning.
Okay, Omar, as always, thank you very much for insight and analysis into the Forex marketplace.
Thank you.
This has been your Forex Market Buzz with Omar Esiner, Senior Market Analyst at Ruesch International. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.